Hi guys, good evening to you all. Welcome back to the EMD Forex Trading Academy channel where you all will be learning a lot of things from beginner to the advanced level on Forex market. In our last video, we stopped at introduction to Forex markets. We have already talk about it already and we are done with chapter 1. If you have not watched the video, go and watch the video, comment all the challenges you are facing as a beginner into the forex market, and me, I am going to create a effective video that may actually help you to solve your own problem about the financial market, especially forex. So for today, let's quickly dive into chapter 2. So for chapter 2, we are going to be talking about how the forex market works and the structure of forex market. First of all, let's start with the forex structure. Forex market operates in a decentralized manner, meaning there is no central exchange like the stock market. Instead, it is a global network of banks, brokers, and traders all connected electronically. This network is called the over-the-counter (OTC) market. Let's talk about the forex market sessions. The forex market is open 24 hours a day during weekdays because different financial centers around the world open and close different times. There are four major trading sessions. First of all, we have the Sydney session. Secondly, we have the Tokyo session. Thirdly, we have the London session. And then fourthly, we have the New York session. Let's talk about the Sydney first session, which is the number first in our list here. The Sydney session, the opening time is 10 p.m. GMT, and then the closing time is 7 a.m. And then the most volatile pairs during that particular session time includes AUD and then SZD, which is the New Zealand dollar, and then AUD is Australian dollar. Let's talk about the Tokyo session. The opening time is 12 a.m., closing time is 9 a.m., and then the most volatile pair during that time is JPY, which is the Japanese yen, and then we have still AUD, which is the Australian dollar. Thirdly, we have the London session. The opening time is 8 a.m., closing time is 5 p.m., and then the most high volatile pairs in that particular time we have Euro, we have GBP, Great Britain pounds, and we have CHF. And then fourthly, we have New York session. The opening time is 1 p.m., closing time is 10 p.m., and then the most high volatile pairs during that particular time include USD, United States dollar, and then Canadian dollar, which is the CAD. And then let's quickly look at the best time to trade Forex. The best time to trade Forex is when two sessions overlap because this creates high volume and a high volatility, giving you the best trading opportunity. So within these sessions, we have some sessions that are overlapping with each other. Let's quickly talk about those sessions overlapping with each other. First of all, we have the London and the New York overlap, which is 1 p.m. to 5 p.m. GMT. So that particular sessions are overlapping with each other, which is also the best time to trade because in that particular time, the market tends to get a high volume, high volatility, much more liquidity to execute faster within seconds. Secondly, we have the Tokyo and London overlap, which is the 8 a.m. to 9 a.m. GMT, which is also good for JPY pairs, which is the Japanese yen pairs. And then thirdly, we have avoid trading during low volume period, which is the Sydney session. Honestly, a lot of traders are not trading during the Sydney session, honestly. So because the market does not gain a lot of volatility, enough volume, enough liquidity to execute trade faster. So a lot of traders do not trade during Sydney sessions. So we all know that in Forex, there are some key terminologies and key points you guys need to know. And we are going to be talking about it right now. So let's quickly look at the key Forex terminology. First of all, we have pips. Pips. Pips mean a small price movement in a currency pair. For most pairs, one pip is equals to 0.001. And then secondly, we have spread. Spread is the difference between buy and sell price. And also this is how brokers make their own money through spread. But with time, you all will know what is spread, and then you will also like understand it practically when we start talking about the technical aspect of Forex market. So thirdly, let's go to lot size. What do you mean by lot size? Lot size is the standard unit of measurement in Forex. That is, one lot size is equals to 100,000 units of currency. And we have leverage. Leverage means it allows you to control a larger position with a smaller amount of capital. And then we have margin. Margin is the deposit required to open and maintain a leverage position. Sorry, to open and maintain a leverage position. That is all what margin is. So let's go down. We have long and short. I know a lot of you here are hearing the word long and short. In a simple terms, long mean buying a currency pair expecting it to go up in value, and short means selling a currency pair expecting it to go down in value. And then we have stop loss. Stop loss mean an order to close automatically when you are in a specific loss. So stop loss is very, very important when it comes to technical aspect of Forex market. When you start executing trades, so you need stop loss. It's a must for you to set stop loss so as to avoid unnecessary loss. And then we have take profit. Take profit simply means an order to automatically close a trade at a specific profit level. So take profit is very, very important too when it comes to taking profits automatically without you closing the particular position manually. So I think we are going to be stopping here, and on our next video we are going to move to chapter 3 where we are going to discuss a lot with you guys. Don't forget to hit the subscribe button and then turn on notifications so that you will get notified on the latest video coming soon. Thank you guys.